Hello. It's Monday, November 24th, and if you thought the chaos ended on Friday, oh no. Crypto spent the entire weekend cooking. JPMorgan is under fire, again. Account closures, data leaks, and a rumor that their short on MicroStrategy is so massive that one good pump could bankrupt the bank. Yes, you heard that right. And honestly, if 2025 ends with Jamie Dimon rage quitting because Michael Saylor broke his balance sheet, I'm not saying I'm rooting for it, but I'm also not rooting for it. Meanwhile, Barclays says Jerome Powell is suddenly leaning toward a December rate cut. Apparently, the Fed saw Bitcoin at 83,000 and said, okay, maybe we've done enough. Then we've got a brand new Gmail-style Epstein email viewer taking over the internet, PPI and PCE data coming this week, and Black Friday-level panic still rippling through the markets. And Bitcoin, hovering in the low 80s, oversold, underloved, and waiting for someone, anyone, to stop doom scrolling and actually buy something. It's a big Monday, a big week, and we're breaking down everything from the liquidation bug aftermath to the JPMorgan panic to Powell's rumored pivot to what really matters for the PCE data this Wednesday. This is the SENB Daily Brief, and we're kicking off Thanksgiving week with fire.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Welcome back, everyone. Let's go over the market update. And after this weekend, the charts look like they went Black Friday shopping and only bought pain. Bitcoin spent the entire weekend pinned between 82.5K and 84K. Volume was low. Sentiment was lower, and the stochastic RSI is basically flatlined in oversold territory. We didn't get a liquidation cascade. That's the good news. The bad news? We didn't get any buyers either. Bitcoin is like, I'm not falling, but I'm also not getting up. Just like me after Thanksgiving dinner. Solana fought to keep the $125 handle all weekend. It lost it, regained it, lost it again, like a toddler holding a balloon. And despite ETF inflows still being strong, price continues to act like it owes someone money. Solana is technically oversold, but still waiting for a reason to behave. Ethereum is stuck in the same slow bleed pattern, dipping as low as $2,700, recovering slightly, but still showing zero strength. Open interest is down, funding rates are flat, and whales aren't touching it. No major weekend action, just chop. XRP was the quiet kid this weekend, down slightly, very little volatility, and still waiting for clarity on the ETF timeline. Holders are coping by saying, the quieter it is, the bigger the move, which is cute. But let's be real, XRP is just bored right now. The total crypto market cap didn't move much, but sentiment actually worsened. Stablecoin supply still dropping, CME futures open interest still at multi-month lows, whales sitting out, retail scared to click the buy button, liquidity very thin. We are in the part of the cycle known as everyone waiting for someone else to go first. The big story is that there were no major liquidation spikes this weekend. That's rare after a crash, and it suggests one of two things. Either most of the leverage already got wiped on Friday, or everyone is too scared to open new positions. Here's the data that will actually matter for the markets this week. PPI, Tuesday. Jobless Claims, 10, Wednesday. PCE, the Fed's favorite metric, Wednesday. Markets close Thursday, Thanksgiving, early close Friday. If PCE comes in soft, Bitcoin has breathing room. If it comes in hot, Monday's pain might look gentle. And that's your market update. Flat, fragile, and full of tension heading into a massive data week. Up next, all the biggest stories from late Friday through the weekend and into this morning, including the JPMorgan panic, Powell's rumored pivot, and why the Epstein email viewer refuses to leave the trending tab. Covering it all after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Let's get into the biggest stories from late Friday through this morning, because the last 72 hours were absolutely loaded. The internet spent the entire weekend dragging JPMorgan by the ankles. It started with Max Keiser claiming JPMorgan opened such a massive short position against MicroStrategy that if MSTR pumped 50%, it could liquidate the bank. Not confirmed, but it blew up instantly. And look, if your short position is so big that Michael Saylor can personally end your career with one green candle, you messed up. Then things escalated. Reports and screenshots started circulating that huge numbers of customers were closing accounts at JPMorgan, apparently in protest. And because this is 2025, of course, a data leak got thrown into the mix too. So between the rumored MSTR short, the backlash from Bitcoiners, and the alleged leak, JPMorgan spent its entire weekend getting publicly spanked. And then Barclays decided to lob a grenade into the macro conversation. They're now claiming Jerome Powell is leaning toward cutting rates in December. This after weeks of insisting the Fed was staying put. So what changed? unchanged, unemployment ticking up, liquidity tightening, retail spending slowing, consumer confidence tanking, and financial markets having a mild nervous breakdown. You don't have to be Sherlock Holmes to see why Powell might have poured himself a large glass of screw it. If true, this becomes the most important macro story in crypto right now, because a rate cut is basically a giant we're sorry card to risk assets. Meanwhile, the Epstein email story refuses to calm down. Developers created a Gmail-style interface for the 2,000-plus DOJ emails released on November 12th, and it exploded over the weekend. AI-powered search tools, screenshots going viral, people finding connections, half connections, and things that definitely should have stayed off the internet. It's now trending across multiple regions, and weirdly, it's impacting broader sentiment. Whenever the political system looks messy, Bitcoin tends to benefit once the initial fear wears off. Institutions did not return over the weekend. CME futures open interest is still sitting at multi-month lows, a very clean signal that big money is waiting on the sidelines. Not leaving, not entering, just standing in the doorway like they forgot why they came in. And that fits perfectly with the weekend's price action. No major liquidations, no major buying, just paralysis. This week doesn't just matter. It could define the rest of the year. PPI on Tuesday, jobless claims on Wednesday, PCE on Wednesday, the big one. Then the Thanksgiving shutdown Thursday plus early close Friday. If PCE comes in soft, crypto could snap back hard. If PCE comes in hot, Bitcoin may retest the high 70s. And because the universe loves drama, we get these numbers right before Thanksgiving dinner. So prepare for emotional whiplash. Developers, quant, and analysts dug deeper into Tom Lee's bug in the code revelation. The new theory, there may have been a second automated liquidation wave on a separate exchange triggered by the original pricing error, meaning the October crash wasn't just a bug. It may have been two bugs talking to each other. Fantastic. We're living in a Marvel movie written by software engineers. Exchange data shows stablecoin supply still shrinking, whales not accumulating, futures positions depressed, very few new longs opening, market makers passive, open interest weak. In plain English, we're not falling because there's no one left to sell, and we're not rising because there's no one ready to buy. Brand new data from this morning shows consumer confidence at its lowest level since mid-2022. That's the kind of macro backdrop where the Fed starts sweating, and why Barclays thinks a December rate cut is suddenly on the table. So here's the full story in one sentence. Banks are under pressure, macro is wobbling, political chaos is trending, and crypto is holding its breath ahead of PCE. And with all of that swirling around, liquidity thinning, macro wobbling, political chaos trending, and markets exhausted, the big question now is, what happens next? Predictions, key levels, and this week's setup right after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's talk about what comes next, because this is one of the most important weeks of the entire fourth quarter. Bitcoin spent the entire weekend stuck around 82 to 83,000. And that tells us something. There isn't enough liquidity to force a crash, but there isn't enough conviction to spark a bounce. So here are the levels that actually matter this week. 82K, short-term support. 80K, psychological line. 78K, the liquidation magnet if PCE is hot. 86K to 88K, the relief rally zone. 90K, where the market starts to believe again. Anyone talking about 100,000 this week is emotionally coping. Focus on the 80s. Wednesday's PCE report is everything. Everything. If PCE comes in soft, Bitcoin could put in a local bottom and run back toward 88,000 quickly. If PCE comes in hot, the high 70s become a real possibility. This is the same setup we saw before the July FOMC meeting. Thin books, shaky sentiment, and a macro number that could flip the entire script. If Barclays is right, and Powell is even considering a December rate cut, that creates asymmetric upside, because even the possibility of a pivot often moves markets more than the pivot itself. So we're in a weird moment. The Fed might be about to save the market, but only if the data gives them permission. Ethereum continues to look heavy, with no meaningful catalyst until January. Solana is holding 125 out of sheer stubbornness, and XRP is basically filing paperwork, waiting for ETF clarity. None of these will lead a recovery. They will all follow Bitcoin like baby ducks. One thing about bottoms, they rarely happen when people are optimistic. They usually form during boredom, exhaustion, and apathy. And this weekend's flat price action is exactly that, the exhaustion phase. There's a growing argument that the October wipeout wasn't a true market breakdown, but a mechanical failure. And markets that crash mechanically often recover faster than markets that crash emotionally. The question is whether buyers step in once the PCE dust settles. Right now, buyers are acting like the market is contagious, but that won't last forever. Thanksgiving week has historically leaned bullish, but this year comes with a twist. Wednesday's data could override all seasonality. If PCE cooperates, the holiday rally could spark early. If it doesn't, the turkey isn't the only thing getting carved. So here's the simplified version. Bitcoin likely moves sideways into Wednesday, then volatility returns hard. Upside if the data softens, downside if it doesn't. And that sets the stage for the rest of the week. Tension, catalysts, and a market waiting for someone to make the first move. Up next, your mailbag and proof of thought submissions and some of the best questions we've received in a while. We'll get into them right after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, time to dive into today's mailbag and proof of thought. And you did not disappoint. Some of these were smart, some were unhinged, and one made me question humanity, which means it's a normal Monday. First up, is JPMorgan really at risk because of MicroStrategy? This one came up a lot this weekend. So here's the clean answer. No one actually knows if JPMorgan took a massive short against MicroStrategy, but the rumor spread because it feels believable. JPMorgan has the same energy as a boss who says, I don't micromanage, and then sends you 14 emails about your stapler. Could MSTR pumping 50% liquidate JPMorgan? Probably not. Would it be hilarious? Absolutely. So treat it as a narrative, not a confirmed risk. Next one reads, is Bitcoin done falling, or are we going to the high 70s? This is the big one. And the real answer is, it depends entirely on PCE Wednesday. If PCE is soft, the bottom might already be in. If PCE is hot, the high 70s get unlocked. Right now, Bitcoin is behaving like a tired raccoon. It's not moving unless something loud happens. This one says, should I wait until after Thanksgiving to buy? This is a totally fair question. Thanksgiving week is historically weird. In most years, we get a bullish drift into the holiday, but this year hinges on macro data. If you're waiting for clarity, Wednesday gives it to you. Not financial advice, but maybe don't YOLO on Monday when the market is basically hungover. This viewer writes, what's your take on the Epstein email viewer? Ah, yes, our favorite lighthearted weekend story. The Gmail-style viewer is brilliant. The memes are undefeated, and the political fallout is going to be enormous. Does it matter for crypto? Indirectly, yes. Whenever institutions and politicians look messy, Bitcoin benefits once the dust settles. Also, it's definitely the first time Gmail has caused mass anxiety outside of the I sent that to the wrong person scenario. A question from YouTube asks, can the market bounce before institutions return? Short answer, yes. Retail can spark an early bounce, but a big trend reversal requires institutional volume. That's why CME open interest matters. It's basically the heartbeat monitor for professional capital. And right now, that heartbeat monitor is flatlining like it skipped its morning coffee. And a proof of thought submission asks, does it matter if the crash was caused by a bug? Actually, yes, it matters a lot. If the October crash was mechanical instead of emotional, history shows those recover faster. When markets crash because of fear, bottoms take months. When markets crash because a bot freaked out, bottoms can form shockingly fast. So the question now is whether traders believe in that narrative. And our question of the day, because it's about me. Sen, do you ever take a day off? Yes, it's scheduled for 2031. And that wraps today's mailbag and proof of thought. Some sharp questions, some chaotic ones, and a few that absolutely should have stayed in drafts. Coming up next, the SENB ecosystem update and what's rolling out this week as we head into Thanksgiving. Back in a moment.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's shift gears and talk about what's happening inside the SENB ecosystem, because even while the markets were wobbling all weekend, the project quietly kept leveling up. First, engagement. The community showed up strong this weekend. New proof of thought submissions, new creators joining in, and more people discovering the Daily Brief. And it's becoming clear that the audience isn't just watching, they're actively shaping the direction. Which is great, because if it was just me shouting into the void, I'd start charging the void rent. The website continues to expand. New episodes uploaded daily, creator features being developed, the radio page filling out, and more structure coming to the character universe. We're building this entire media project in real time, not in secret, not behind closed doors, publicly, with the community. Proof of Thought is already proving itself. People love being part of the show, and the submissions this weekend were some of the smartest and funniest yet. And a couple were so chaotic, I had to reread them twice to make sure they weren't written by an AI with emotional issues. We're down to the final pieces of Phase 1. Daily Brief consistently rolling, Tooker crossovers, character expansions, QR integrations, branding synced across platforms, token infrastructure live, creator ecosystem underway. It's rare for a project to stick the landing on its early roadmap, but we're basically there. And because the community traction is ahead of schedule, Phase 2 is already warming up. That includes creator submissions, audio contributions, new character-driven content, expanded interactivity, and new SENB utility layers rolling out this winter. The roadmap said Q1, the community said LOL Mo. So, here we are. Just a quick reminder, the SENB token isn't trying to fight the macro trend. It's building underneath it. And when the markets eventually rotate back to growth, projects with community, content, and culture are the ones that catch the early wave. Plus, the token doesn't panic when Bitcoin drops. It doesn't have feelings, which is healthy. And that's the SENB update. Steady progress, early momentum, and a community that keeps pushing this project forward even when the markets are acting allergic to good news. We'll wrap things up after the break.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, that brings us to the end of today's Monday edition of the SENB Daily Brief. A quiet weekend on the charts, a loud weekend on the internet, and a strange, anxious calm settling in before Wednesday's data storm. Bitcoin's hovering, liquidity is thin, institutions are silent, and everyone's watching PCE like it's the season finale of a show that hasn't made sense since episode 2. We've got JPMorgan rumors swirling, Powell rate cut whispers, the Epstein viewer melting social media, and a macro week that could flip the sentiment table overnight. Basically, the entire financial system is feeling the same energy as a raccoon trapped in a Whole Foods, confused, hungry, and absolutely done with everyone's opinions. Tomorrow, we break down the PPI data as it comes in, cover any developments on the JPMorgan saga, and track Bitcoin into the Wednesday PCE report, the one number that might dictate the rest of the year. Look, markets aren't always loud. Sometimes they're confusing. Sometimes they're boring. Sometimes they're balancing on a knife's edge waiting for someone to blink. And that's where we are now, in the quiet before the catalyst. So, stay grounded, stay informed, and stay sane. We've got a big week ahead. This has been the SENB Daily Brief for Monday, November 24th. Thank you for watching, thank you for the proof of thought submissions, and thank you for being part of the fastest growing media project in crypto. I'm SENB Hero, and I'll see you tomorrow. The SENB Daily Brief is a production of SENB Hero Media in collaboration with Whole Shot Coffee, coffee that fuels champion. Written and hosted by yours truly, SENB Hero. Production editing and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit senbheromedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.